Welcome to the Naavik Gaming Podcast, where it is our mission to explore the business and future of video games. We bring together the industry's brightest builders, investors, and thinkers to keep a pulse on current events, dissect emerging trends in games, share lessons learned, and have a great time. This podcast is also part of Naavik's growing ecosystem, which ranges from free and premium research to consulting and advisory services. For more information, visit www.naavik.co. This episode is brought to you by Overwolf. With over 1,500 games supported, 165,000 creators, and 38 million monthly active users, Overwolf is the guild for in-game creators. Whether you're a gamer, creator, or game studio, Overwolf is the ultimate destination for integrating UGC in games. For game studios, Overwolf offers CurseForge for studios, a white label solution that lets game makers and publishers easily integrate mods safely and seamlessly into their games, both existing and new, at zero cost. It's battle-tested by AAA studios and games, including Maxis with The Sims 4, Studio Wildcard with Ark, Take-Two Interactive, and others. For creators, Overwolf is the all-in-one platform that enables creators to build, distribute, and monetize in-game apps, mods, and game servers. In 2022, Overwolf paid over $160 million to in-game creators, proving that they truly value the talents and contributions of the gaming community. You can check out everything Overwolf has to offer at overwolf.com or check out the details in the show notes. And with that, let's jump into the episode.
Hello, everyone. Welcome to another Naavik Roundtable. I'm your host, Devin Becker, and today I'm joined by some awesome panelists that we like to see here very often. We've got Aaron Bush, co-founder of Naavik, Anil Dasgupta, co-founder of First Light Games, and Jonathan Anasta, CEO of Clash TV. And Aaron, you have some things you want to run through real quick?
Yeah, well, first of all, excited to be here with this crew again. The one thing I wanted to mention before we dive into the topics today is that the Open Gaming Research Initiative is starting to pick up full steam. So you probably heard us announce this effort in the past few weeks, but some of the pieces that we announced are starting to click into place and get published. So this week, for example, we published our first fully public game deconstruction in some time, with many more planned. So this latest one was about Xbox's mobile Doom game, and it unpacks, not just the game itself, but also, the issues with Xbox's broader mobile strategy, tactics with leveraging key IP, etc. So Nick, our great writer for that, did an awesome job. So recommend people checking that out. And also next week, we're publishing our first public genre report, which will cover the mobile strategy and card market. And having read the drafts of that so far, I think it's really great, and people are going to love it. And there's going to be many more genre reports coming in the months ahead too. So that's just two examples of the Open Gaming Research Initiative picking up. Those are going to be two pretty packed and like great hard hitting reports. So definitely make sure you're signed up and paying attention to Naavik Digest, where we link to all of these things. And even if you're not interested in everything, there's definitely going to be some good stuff and diverse stuff that I expect you still will like and will continue to ramp up. So just wanted to give a shout out to those two pieces and make sure people know where to find them.
Yeah, definitely. I think if you're not already subscribed, then you'll find out that we're definitely blowing up your inbox with lots of good content now, which is fantastic. Probably a lot of backlog for people to read, but make sure to hold on to stuff for the weekend when you have some time if you don't get a chance, because a lot of good content. I'm obviously a little biased there myself, but I think some good stuff. We've got also some great topics to talk about today. Some prescient news here. Just a lot of different things spread across, especially the earnings seasons here. We've got Tencent taking over a majority shareholding of Techland, which should be pretty interesting. Blizzard starting to shift some games over to Steam, interestingly. Some earnings updates around Ubisoft, Stillfront, some other companies. Some stuff around Twitter becoming X and how that might also relate to brand transitions, with EA having to switch over to Football Club from no longer being FIFA. So why don't we dive right into the Tencent stuff here, just to kind of get the meaty money stuff out of the way.
Sure. So as you all might recall, when we did our half-year review a month ago, one of the questions was, what are you keeping an eye on for the rest of the year? And my answer was essentially to keep an eye on the companies with significant capital including those who have been pretty quiet lately, and Tencent being, a prime number one example of that. And since we had that conversation in July, Tencent has broken its effective silence within the realm of games deals twice. And so the first one was actually a quieter announcement to fund Lighthouse Games, which is a new studio, console PC studio, I think, with the goal of becoming one of the UK's prominent AAA studios. So there was that. And then second, this week, Tencent announced that it's buying a majority stake of Techland, which is a longtime studio founded in 1991 and is at least currently best known for its work on the Dying Light franchise, but it's also worked on a bunch of other IPs over the year, like Dead Island, Call of Juarez, etc. So, anyways, it's a talented studio, and with a couple deals happening within a month after a long hiatus, I'm just noting this and just saying I think we should still keep an eye on Tencent. Maybe things are starting to pick up a little bit there, but at minimum, one of my favorite games of the past couple of years, Dying Light 2 specifically, it's heading over to Tencent land.
Do you expect that to have any effect on Dying Light as a franchise, or like any DLC for Dying Light 2 or anything like that? Was there anything announced in the short term?
No, I don't think anything was announced, and Dying Light 2 came out a while ago at this point. So I don't think this deal is going to have any profound impact on that specific game's plans, but I mean, maybe being able to fundraise or sell partial stake, it'll have an impact on the next Dying Light game, the timelines there, the scope there, some of the broader planning around that, or maybe even some other IPs too. We'll see, but I don't think we'll see any immediate major impact from this deal.
Well, cool. Well, hopefully it turns out to be a good thing. We see a Dying Light 3 just even bigger and better, right? It is, as you said, a great franchise, and we hope that any of these kinds of transitions are generally net benefit for those kinds of things and not destructive in some way. But speaking of transitions and moving things over, Blizzard seeming to kind of capitulate and moving over things to Steam.
Yeah, this is super interesting. So starting 10th of August, you'll be able to play Blizzard games using Steam. You won't just have to go through Battle.net, although they do state that you will have to make a Battle.net account. So you're still going to be adding a little level of complexity there. And the first game that's going to be coming over is Overwatch 2. And specifically, it seems that they're going to be launching that with their PvE story missions. If you remember that whole kind of hullabaloo and hurrah about that we've talked about a few times. That's going to be the first game that they come over to. I think obviously this is really interesting for a number of factors. I mean, one, we know that these days Activision Blizzard actually makes more money on PC than they do console, which is quite a big change for them, and that's without going Steam. So I guess this really makes sense to like widen that audience even further from what they've got there, seeing that it's working really well. I think me and Devon are particularly looking forward to being able to play Diablo whilst in transit, stroke on the toilet. Maybe I shouldn't reveal too much information there, but on our Steam decks, being able to play your favorite Blizzard games, I think is a big win. Yeah, I do think it's quite interesting though. I mean, it's, they're one of the few that with Battle.net, I feel they do have, or they did have a lot of success with that comparative to other launchers because of the quality of their products. But I feel maybe the decline of Blizzard as a whole over many years now is maybe they can sort of see which way the wind is blowing. So maybe I threw that out to the panel, but that's certainly, a big step of change, I would say, from them. And of course, what will happen with the takeover now going through as well? Well, how that are going to tie into Game Pass and things like that.
I think it's very interesting because you nailed kind of the pivot at Activision Blizzard from console to PC. During my tenure, the big news was actually, ironically, when Bungie became available on Battle.net, and it was the first time that an Activision title was available on the Blizzard platform. And that was about sort of the beginning of the shift towards the power of PC. And now to see the shift become so large that obviously, a massive PC gaming platform like Steam becomes the beneficiary of the entire Blizzard ecosystem. You also sort of can't think a little bit, putting your regulatory hat. Well, they've been hugely successful opening the aperture to third-party platforms, lessens any question, around antitrust and anti-competitiveness. So, who knows? This decision was clearly made before this announcement. And, given the strategy, was it in fact another lever to prove that they're not building an anti-competitive distribution landscape?
I'll just add to really quickly that if you look at like the earnings results of Activision, it's been pretty clear that Blizzard has been struggling to maintain or grow its monthly active users. And even with the launch of Diablo 4, you can see that there are still strains there. So maybe it's even with the launch of Diablo 4 and the new users that brought on, the company didn't really see an increase in users, too much, quarter over quarter, et cetera, which shows that, there's some pressures on some of the other leading franchises there. And I think just finding ways to tap into more distribution and adding more ways for people to get involved is also at least partially a way to kind of help just get back to growth in some sense. As Steam becomes more powerful of a force, this is just another testament to the big companies still having to lean on these other platforms for their own growth ambitions, or else they do suffer too.
Can I ask, was it a conscious choice from Activision Blizzard to shift to PC, or was that just the result of where the users moved to? Because I do find that kind of unusual that, especially with Call of Duty, that used to be a beast on consoles specifically, right? Modern Warfare's especially. So why has that not sort of stayed as the sort of tentpole for them and it's moved to PC? I can definitely understand mobile, especially like activation in China and things like that, because that's where, those guys don't own, so much of consoles and they could maybe but they'd be moved to more to mobile than PC. So I'm just a bit curious because whilst I understand this move, it does also sort of seem that like maybe they're recognizing that they just can't, well, Aaron just mentioned it, their growth, that they can't grow. So they're just going to kind of keep sustaining what they've got. Maybe I bring too much into it.
I don't think it was intentional for shift. Again, I go back to my tenure and there was 3 multi-billion-dollar console IP, right? There was Skylanders, there was Bungie, and there was Call of Duty. 2 of them were sunset, and that came, a couple of years after sunsetting Guitar Hero, which was another, multi-billion-dollar console franchise. So I just think, frankly, they've been unable to recrack the billionaires club, on console, and excuse me. And the hits that they've had have been sort of, smaller scale, the Crash Bandicoots of the world. That said, we obviously know that the PC ecosystem is higher margin. So if you can't find growth from top line growth, you try to find growth from margin. And certainly, pivoting towards PC, if you're not seeing top line growth, will increase margin. So if you're under, public shareholder pressure to, continue to increase earnings per share and you're not growing the top line, your only pivot is towards where your highest margin customer is.
It's funny as well because this, like, you're talking about going one direction, but it's really, they kind of seem to be going in a lot of directions because, for example, on the Diablo side, they've gone towards the console a lot more, right? Where, they supported console stuff with Diablo 3. They started eventually, like, late stage, they supported Switch. And then, like, the Diablo 4 launch was a lot more across the platforms with crossplay enabled and things like that. So they seem to actually being supporting both sides of it with, like, a PC native game going more towards the console, and then, like, the console heavy games maybe going towards the PC side and vice versa. But you also have situations like where Call of Duty has also been on Steam for a while, right? Like, that's why I play the Modern Warfare 2 is on Steam. That's not one that has to come over. And I almost even forget it's on there. I go to play Diablo 4 and I see it pop up with something about Modern Warfare. And I'm like, oh yeah, that's right. I guess I could play it on here also. And you have that with like EA's, system as well. And all these systems where they try to introduce their own thing, even Ubisoft's, they all still force their own logins and things like that. But they also like give you this access. Now, of course, when they do that, right, they go through Steam, they have to give Valve a cut of that. And obviously that's where like the compromise seems to come in, right? And to Aaron's point, is this a situation where they're like, you know what, this game's not doing well enough that we're willing to take a 30% hit or whatever deal they strike to be able to bring this over to a platform with a new audience, maybe even get some new exposure, like from seeing what your friends are playing on Steam. Like, obviously you're not gonna see what your friends are playing on Battle.net if you're playing on Steam, and those sorts of like effects to grow exposure. I mean, is that like really, do you think worth it, for example, for that 30% loss? Speaking of taking a hit here, we've got CD Projekt laying off about 9% of its workforce.
Yeah, so the era of efficiency continues, and that's something we've been talking about for the past year or so. And so it was just announced that CD Projekt is laying off about 100 people, which is 9% of its staff, which is a pretty big cut and another hit on a culture that is still recovering from all things cyberpunk. And on one hand, of course, this is disappointing, especially for those it affects. And it does seem like leadership is trying to be thoughtful about how these layoffs are conducted, such as by giving several months advance notice as to when certain employees will actually need to depart and stop working at the company. But on the other hand, it's really not totally a surprise given that the company has made pretty large changes to its product suite. And one big example is that they are sunsetting all things Gwent, the Witcher themed card game, at the end of this year. And as of the last earnings report, 5 or so% of the company was still working on that franchise. And it was actually closer to like 15% a couple years ago. And so even with that main style of game being removed, it has like natural repercussions for who needs to work on other things. And so the outcome, of course, is just going to be a slightly more focused, more streamlined business, and that really is a good thing. And as we've mentioned before, what matters next for CD Projekt is just crushing like the upcoming Cyberpunk Phantom Liberty DLC to keep that franchise viable and humming. And then, of course, moving on to the next big Witcher game. And this is a company where those tent poles will define the vast majority of what matters in the outcome for this company. But yeah, through that refocusing, they're having to make some changes. And so obviously this is big news for CD Projekt, but and mentioning it more just to, continue like pointing out the milestones of some of these like broader themes that matter and are happening to the entire games industry. And so again, the era of efficiency, it continues. It's not over yet.
So my question about the era of efficiency is, in this new, arguably bull market, does that remove some of the pressure for efficiency? With stock prices re-increasing at a rapid pace, is Wall Street no longer going to reward efficiency, or do we think this is a trend that's going to continue?
I think it's going to continue. I think that we'll see. I mean, no one really knows what's going to happen next in the market. But what feels different to me is that in the 2021 era, it's just everyone was rewarded for growth at all costs. And it seems like, at least even if we are entering more of an optimistic stage in the market, there still is more of a well-rounded focus on not just driving top line growth, but creating actual value through cash flows and such to kind of determine which companies should get rewarded in the market and which don't. And so I don't think we'll be returning exactly to the way it was before. But yeah, certainly in some cases the market will be more forgiving, I think, but not fully the same way. But curious if you agree or disagree with that.
Well, I mean, I just think as we're starting to see, it's bifurcation, right? Tesla returned to a world of extreme top line growth at the expense of margin and was not punished, right? So it's I think we're recalibrating. I agree it will not go back to the irrational exuberance of 21, but I think we may be recalibrating to not be so hyper-focused on EBITDA and efficiency and start to reward growth, at least in select outcomes.
I think that's fair.
I guess the question I have then with it, like specifically to CD Projekt, but also like probably applying to some of these other ones that have had to like really tighten the belt, is when they're relying on a couple tentpole franchises like this, does that limit their ability to grow out of these franchises? Like, for example, Cyberpunk was a new franchise for CD Projekt, right? They were relying pretty heavily on The Witcher before. Let's say Cyberpunk is not able to pick up the same level of excitement for continued, growth because of the big initial failure that it had, because of all the problems, right? And let's say the next Witcher isn't an initial hit. Do they end up in a situation where they're just really having to like think about, do we just start cutting huge amounts of people? Do we need like more investment? How do we like grow out of that situation when we don't have another franchise in the wings that we've been working on? Because Cyberpunk kind of was that franchise, right? Where it was like that was supposed to kind of help with, the gaps in The Witcher and things like that. is that a problem when you're a company that only has one or two franchises and you don't have any room budget wise to or people wise to be able to continue to expand that out?
Well, I think what Aaron says is kind of true that, Gwent was really their passion project. They kind of allowed their team to work on it thanks to all their good work from The Witcher. So it's got to be one of those that's painful, but is, I think, professional and pragmatic to say, look, you got to work on either The Witcher or Cyberpunk. I think as we reach more of a consolidation phase and, even some of the previous stories that we've covered already on this, this week's Metscast, it's, sometimes it's about maximizing what you've already got rather than going for something new that's more of a gamble to pay off. So I think, to be honest, I think it's one of those that don't want to kind of repeat his words, but I agree with Aaron. It's like, it might be painful for them to do internally, but I think it really makes a lot of business sense and smart going forward. Deploy your resources in the best possible way, focus on titles that are more likely to do well and just take advantage of that.
Yeah, not all IPs are created equally. Not all games are created equally, right? Like if they really go fully focus on expanding like the core Witcher game or building out the Cyberpunk universe, like that could be all they need to really turbocharge the business for the next few years. And also, to their credit, they still are, creating new games, working on new projects. This is less deciding not to work on new things and more deciding to stop working on something old that's no longer delivering as expected. And so I think the conversation is different. But yeah, absolutely. I think you could recalibrate too hard in the wrong direction at some point. But I think for the most part, getting leaner and more streamlined on what matters most is generally a good decision.
Yeah, I guess we'll have to see how that Phantom Liberty DLC does too, in terms of like the future of Cyberpunk, right? If that flops hard, then there's a possibility they're just a Witcher game company again at that point, depending on how things go. I doubt they're going to spin out a CCG from Cyberpunk anytime soon, although I'd be interested in seeing that. I actually do own the physical copy, the original Cyberpunk CCG, so maybe they can just bring that back.
I was going to say, it has been done in the past. I seem to remember that too, right?
Still got a box set of that around.
Yeah, but that was Wizards of the Coast, wasn't it? Who made that?
I think it was,
yeah.
But you never know. You never know, right? Like plenty of opportunity for the future. Like you guys said, a passion project. So maybe they'll even just keep Cyberpunk going, even if Phantom Liberty doesn't work out. Especially with the transmedia success, at least with the show, which was kind of a one-off. But you never know. They might be able to expand out in some other directions. I know there's like graphic novels and things like that also. So maybe there's some opportunity there. But you mentioned earlier Tesla. We've got Twitter rebranding to just X. So that's going to be awkward for everyone Xing about this podcast.
Yes. So, I think we've got a couple of topics this week that involve branding and rebranding, and also involve brands that have baggage, legacy, potentially damaged brands. And let me sort of lay out the two scenarios. You referenced, we've got Tesla moving to X. We're not talking about gaming specific, but we're talking about a platform where, a lot of gaming content is distributed, consumed, etc. And we've also got FIFA rebranding to Sports FC. That in and of itself, not new news. It was announced last year, but now we see it in the marketplace. There's a couple of layers to this, right? Layer one is how much brand matters on top of like UX and experience, right, to the marketplace. Layer two is how much does awareness, whether it's good, bad, or otherwise, how much baggage is on that brand matters more than something unknown or lack of brand. And I think you have both of those levers taking place in both of these examples, right? I think for all the hate that sort of this X rebrand has gotten on the internet, I think people have forgiven the baggage that Twitter brings to the table, right? Like Twitter lost the scale war, right? Twitter's kind of stalled at 300, 400 million users, while Instagram, Meta, and TikTok all went to multi-billion users, right? They never made money when they were a publicly traded company. They were disparaged first as a platform for the coastal media elite with right-wing backlash, and then after Elon Musk, dismissed for being right-wing Tesla fanboys, so both ends of the political spectrum have had issues with Twitter. So I would argue, whether X is the right answer or not, Twitter is a brand that did not have all positive baggage, right? Twitter potentially brought a lot of negative baggage. And so the question we're going to see is, does a generic, not particularly well thought out, potentially trademark fraught brand, survive or not survive more or less than a brand that people somehow are having some amnesia about the challenges around the Twitter brand, right? All of a sudden, people have forgotten that Twitter was a challenged brand for a decade. And it's like, what happened to the Twitter that I loved? You hated Twitter last week. You hated Twitter last week. You didn't love it, right? So why all of a sudden you love Twitter? Again, X is not necessarily the solution. And then as we move to the gaming side, FIFA itself, a damaged brand, right? If you go back a number of years, the huge financial scandals around FIFA, that sort of dies down. And then, there have been multiple articles written about the damage to the FIFA brand around this year's World Cup, right? And so a brand that was not all positive is now no longer on a video game. And is that a net positive or a net neutral, right? Are people sure, if I'm going to take the side of the FIFA brand was valuable, somebody walked into the store, they don't know what FC is. This isn't the game I bought before. They're not sure they're going to buy the right game. So they don't buy the right game or they don't download the right game, right? It doesn't have the brand equity, but it also doesn't have the brand baggage, right? So I think in both of these examples, we're going to decide or find out, the marketplace is going to tell us, is brand equity, baggage laden or not, more important than less brand equity with less baggage?
I was absolutely cracking up when you were saying some of the stuff about Twitter and X. I was like, Jonathan, tell us how you really feel right there.
It's not how I feel. It's how the marketplace feels. I was shocked. And again, it goes to how polarizing people can be, right? Like all of a sudden, regardless of what you think about Elon Musk, whatever he's doing now must be bad. And again, I am not saying X is the right word. I am not saying he's rolling it out in a professional manner. But all of a sudden, all the things that people disliked about Twitter are forgotten. And it's going to be interesting to see if all of a sudden the things that people disliked about FIFA are forgotten, right? FC is nearly as generic as X, right? We've gone from in both cases, highly polarized, highly known brands to less polarized generic brands. Let's see what the marketplace says.
Yeah, I'll touch on the FIFA one in a moment because that's pretty hilarious. You're right to say that. It's got how they came up with FC is God knows. But just on Twitter and X, I mean, I think that is relevant for games industry because I think influencer marketing, in my opinion, is one of those things that isn't talked about enough as being one of the big paradigm shifts in how games are basically sold to customers over the last 10 years. But we've got to a state where things like YouTube and or Twitch is still not profitable despite being around for so long. You've got to this kind of point where the top people are the top people. It's hard for new ones to break in. So how good is it really for getting it out there? It definitely plays a part in the strategy. We touch upon it with Blizzard, with what they're going to do with Overwatch and things like this. But I feel like that is somewhere that is ripe for disruption. And I think what is interesting, I don't know if you saw this yourself on Twitter recently, but they started sharing like what content creators were making and these guys were kind of retweeting it. And I think that's like the big, I don't know, I say innovation, but is probably the direction where it's going to go, where people will say, well, look how much I made because I was a great content creator on this platform. And without doubt, one of the best things to create content for is games because it's one of the most efficient uses. If you've got a great game, it looks good. I don't know about you, but I feel like word of mouth or seeing something on these sort of social media platforms really gains your attention. Like, little plug from me, I don't know if you've seen Armored Core from Software, but boy, that was a game that I didn't even know was coming out, and now I'm like, I think my wallet's just been deleted of $60 because that's going to get purchased by me. So that just shows you the power of it. So I think that is relevant, and there is something they could do there. I will be interested to see, though, again, kind of mentioned how, IPs are not made equal. Content creation isn't made equal either. These algorithmic feeds tend to be that the first sort of 1% to 2% that get in early make all the bucks and no one else can get in. Will this really change that model? Perhaps it will, perhaps it won't. Like some of the rumors with this kind of X rebrand are that it will allow more kind of crypto payments. And, if you like a piece of content that you see, you can donate or tip a little bit. It's kind of similar to what you have like in WeChat in China, which we know is kind of like where Elon Musk has, I guess, his sort of ultimate aspirations where that product will go. So even though I think the rebrand is awful, I'm kind of shocked as to like what Twitter's become recently. I do actually find this stuff pretty interesting because I do think that there is something there to say that there is some disruption there in terms of influencer marketing that, if rethought, could actually be net positive and very powerful for games. So that's my stance on that. Then just moving on to the FIFA thing. I'm a huge football fan, so I kind of love talking about this. This one I find very interesting. So, FIFA's been EA's one of their most successful franchises. In fact, makes more, Ultimate Team makes, I believe, like 60% of their revenue yearly, right? So it's incredible that this game that was developed by the Canadian devs of all, from their hockey game that they modded into a football game ended up becoming such a beast for them. But what's happened behind the scenes is that basically FIFA themselves felt that they were not getting paid enough for the license that they were giving. And, FIFA and liking money, as you kind of aforementioned there, Jonathan, with the World Cup, they are pretty corrupt and they will do anything to kind of monetize. So actually, EA's obviously decided, well, look, we're the ones that made the game and, you stand to benefit from this as much as we do. So we're not going to pay this ridiculous license you made. And that's why they've gone with this thing. I am curious to this because I can only think of one other time, maybe someone else can correct me here, where I've seen something like this. And this was also a football game where Sega bought the Championship Manager IP and they wanted to make their own team with it. And so the original Championship Manager team made a game called Football Manager, and Sega went on to make Championship Manager. And like, if you're a fan, like, wow, I'm going to get 2 football management games per year now instead of 1. But what happened very quickly is that the Football Manager just won out because the quality was so good and they had like 20 years experience. And, Championship Manager kind of died. And that was an example of where, even though they lost the IP, they maintained the fans and it actually strengthened the franchise, if not weakened it. And that's the only time that I can remember it. And so I wonder if it's going to be history repeating itself. So as you say, they're calling it EAFC 24, FC being football club, I guess. I've got to be honest, that's one of the worst names, I think. I think if I had to name a football game, I could think about 1,000 things. I suppose it's non-offensive. That's probably about the best thing that I can say from it. But I am interested as to like how they'll go from it because, again, FIFA, fair play to EA. Do you remember when like Peter Moore came in? They did this amazing job where Pro Evo was always considered the better game in terms of gameplay, even though FIFA beat it on sales. And these days, people just don't talk about Pro Evo. That franchise kind of died. They tried to bring it back as a free-to-play version. They never did it. That was impressive, I think, in terms of sort of like corporate gaming to defeat a rival like that. So now they're doing this and they're definitely putting out some of the stops. So this week they're announced they're working closely with the Premier League. They've got a lot of the star players on the game and everything like that. But I'll be curious as to what the panel thinks here is like, are they going about it the right way? Will it affect their sales? Will ultimately it just be maybe like, will they make as much this year as last year? Because what is going to happen is that FIFA will allow that IP to be used by somebody else. And so I do imagine when that game comes out, that when it comes to Christmas time, if you're like, a mom and you just buy your kid their game every year, they're going to be like, oh yeah, my kid loves FIFA. I'll just buy them FIFA. And then the kid's going to be like, oh mom, why did you get me this piece of garbage? I wanted FC24. And you're going to be like, what is an FC24? And how does it relate to it? So sorry, I've thrown a lot of thoughts your way. I'll be curious what the panel thinks about it.
No, I think you're right. And it's interesting because I have one more example for you, right? And it's not an exact corollary, but it's when Guitar Hero IP was purchased and Guitar Hero went on with a different set of studios and Rock Band went on with the original studio.
Yeah. You're right. Yeah.
Not as quite as clean and up the middle, but all of a sudden, a category of 1 and one clear leader became a category of 2. And did you support, the studio and, the creative vision of the studio, or did you support the IP? But I think you just literally described the worst fear outcome, right? It's holiday 2023 and mom goes and buys FIFA and, daughter wanted EA Sport FC and returns ensue, right? Not good for anybody.
I think it's going to be a win for EA, a pretty clear win. I mean, on one hand, I think gamers know what's up. Like they're pretty smart, and so they're gonna flock with most everyone to EA FC. I also don't think FIFA will be able to turn around anything compelling anytime soon. And so all of the discourse, all of the all of the even like shelf space, online discussion, digital storefronts, it's all going to be EA FC. Like people are going to know what's happening there. But the biggest win is just losing that licensing cost, even if there is a slight dip to sales, which I don't know if there will be, because so much of the sales is also on the like the digital add-ons over the course of people playing the game. But even if there is a small dip in sales, margins are still going to go up, and there's a chance that profits will be even higher, even if sales slightly fall. And then, of course, even if there's like an awkward 1 year period, um, then everybody will just get back on the EAFC train probably, and it'll continue to be, continue its growth engine of probably increased sales and higher margins. And so I think this is a very value additive move on EA's part that's going to be hard to compete against. Also, I think EA has just been on top of this. Like they're executing the transition, from what I can tell, pretty well and communicating early and often, whereas FIFA doesn't even really seem to know what they're doing yet and hasn't even like announced anything. So yeah, I'm pretty bullish on the EA side of the equation, but also like not we've said that not all IPs are created equally, not all content's created equally, but also not all brand changes are created equally. And so this one actually seems pretty straightforward. FC is like a very simple um, term that kind of means nothing. But I don't think that really matters in this case, because people will know exactly what it is, and it's not going to change any behavior and the way that players play. But I was thinking back on just connecting to the Twitter topic about just like how many successful rebrands have there really been, and what are the commonalities when it happens. And I think that often you see like consumer products have like light brand changes, and it's typically fine when it is more like on the shelf or just people know what it is. And we've seen also a lot of brand changes happen at earlier stages of companies, where like Musically turned into TikTok, but before like it went like crazy viral across the West. And we saw like Blue Ribbon Sports become Nike, but that was like before Nike was Nike. And so I think there are examples where that works in the earliest stages. And when it happens in the later stages, maybe it's like, Facebook turning into Meta, but that's a parent company, and not like actually Facebook, the product, turning into something else. And even like Oculus turning into Quest, like that still is like very early stages for them. So something like Twitter is interesting and is almost counter in some ways, to where like it isn't in that upstart mode anymore. They're changing the name of the actual product in a huge way. Not just like a company. So I put a bit more skepticism on something like that working out and being a good call, unless like the execution of expanding the purpose and mission is done really well, which Twitter has historically, as it said, been like a clown car, and that hasn't really changed. It's a clown car that drove into a gold mine, I think is what someone said at some point, which I think is largely true. So yeah, I'm so much more bullish on something like an EA transitioning like the branding around one of its products that everyone already knows and will stick with, versus an already established company changing its branding to then also start changing its purpose, etc. So I don't think we'll see too many of these changes happen in the gaming world, but I'm more bullish of it working here than perhaps elsewhere in the world or in other industries.
I was going to say that my hot take is that I think 5 years from now it will be called FIFA again, because FIFA will realize that it was much better to have the IP associated with this game than something else. The only way I could see that not being the case is if there's some sort of startup also based in sort of Saudi or something that really pulls out all the stops. But I just think a football game is so hard to make from scratch. Like, you're not going to catch up with someone who has 30 years of experience, if like the animation needed, the logic, the gameplay, the feeling, unless you literally took the top people from there and got them to recreate it. And yeah, that's my hot take anyway.
I got to imagine there's marketing channels as well that they've established with a lot of their fan base, that are looking for being a yearly game, right? Where people are looking forward to news and updates about whatever the next year's model is going to be, stuff like that. Not to mention other marketing channels that might be affiliated with their account in some way. I got to imagine they're been pretty proactive about pushing that out to fans of the game series. Like, yeah, maybe if you're new and you're like, I hear about this FIFA game all the time and I'd love to buy the new one. Yeah, there might be some confusion, but I think if you've been buying it for the last few years consistently, you're hardcore into it. Really, at the end of the day, their target audience is the people who are going to spend tons of money on Ultimate Team, right? So as long as those people know, that seems to me like where the revenue is going to come from. And it's like, whatever, maybe we lose a few retail sales. And as Aaron said, like if they're also shaving off the licensing costs, might end up being a net positive in terms of like revenue, because they're like, hey, we retained the people spending money. We don't really care about the few people who were like just confused. Yeah, maybe some grandmas don't buy it, come Christmas season, but like they probably weren't buying it for the kids every year anyways. They were just randomly buying a one-off, if that's even a thing, right? We see also even like that idea of the physical shelves going away, more games starting to announce they're going to have digital only copies and stuff like that. So maybe the retail storefront starts to matter even less for that sort of Christmas holiday shopping. And instead it's just, hey, give me a gift card so I can buy FC on, my PlayStation or Xbox or whatever when Christmas time rolls around. And I'm just going to buy it on the digital storefront anyways. Like, I don't think grandma's gifting digital copies of games off of this stuff anyway. So it's like, a gift card at best. So maybe that mitigates a lot of it. But on the naming side, I think maybe they should have just gone with the Ultimate Team. A little more on the nose, right? Then they could have been clear about what they're really selling.
Mm-hmm.
But I guess we'll see, I think on the X thing as well, like maybe just Elon making such a huge stink about this publicly, or, just making this kind of this crazy thing. Everyone will find out about it. So I don't think there'll be any confusion. And I would argue that maybe he's still in kind of startup mode, given the amount of changes he's trying to make pretty radically to the company pretty fast. But we'll see. This does seem like a bit of maybe a slow motion disaster, maybe not. But we have some interesting earnings updates across a variety of companies here. Want to dive into?
Yeah, so I'm going to do a quick earnings palooza and cover 3 companies in a somewhat rapid fire way, just kind of covering the most interesting pieces, and then we can discuss whatever stands out. So 3 companies: Xbox, Ubisoft, Stillfront. I'll just go quickly in that order. So first with Xbox within Microsoft, of course. If you look at the results right now, it really is a tale of two cities, and that's probably unexpected. Revenue was up 1%, but essentially flat. But content and services were up 5%, while hardware was down 13%. And so again, probably none of that is surprising if you've listened to this episode or this podcast over the past year and understanding how Xbox has kind of been lagging behind and console sales. But perhaps the silver lining to all of this is that the company did see record active user engagement for this particular quarter, which I'm sure was helped by Game Pass hours being up 22% over year. And naturally, all of this is going to change in the next few months. But I just sort of want to highlight it as sort of like a final snapshot that kind of confirms where we're at in terms of confirming, yes, Xbox hardware is still lagging, but yes, the content is doing okay and yes, they're doubly leaning into Game Pass subscription. And so we might just see more prominent, like double underlining and bolding of what's already going on right now, but just at an even bigger scale in a few months. So that's just Xbox really quickly. Just wanted to cover it because it might even be the last time we cover it with the current state of the business, depending on when the deal closes. The second company is Ubisoft, which on the surface, the results were not great, and because there were light declines across the board, revenue, earnings, etc. However, there were a few things that signaled progress, and not all of this is new. Ubisoft, of course, is committing to their heightened pipeline that we've talked about before, which includes Assassin's Creed Mirage, Star Wars Outlaws, Avatar, Pandora, or whatever that game is called. And they also teased another unannounced big release. They also confirmed that Tencent through Level Infinite will be publishing the Assassin's Creed mobile game, which we kind of saw coming, but it's confirmed. And I think that's going to be a good step for Ubisoft in mobile, leveraging their most important franchise. And also, the CEO confirmed that Ubisoft will continue to take steps toward cost cutting. And so it's just good to see that still be top of mind, because for this company, as we've discussed before, the success, where they go from here, really is a function of those two things: turning around the pipeline in a big, more focused way, and actually delivering on it. And two, dramatically cutting cost and like lowering the bloat in this business. And it's still not as dramatic as it should be, but the market is taking it well. And since we last talked, and I kind of called bottom and just saying, there might actually be a turnaround here. The stock is up 20% over the past month, and I'm obviously not going to take a victory lap after just a month at just 20%. But the market is at least confirming that at least this partial turnaround could be on track. So anyways, those are just my quick thoughts on Xbox and Ubisoft. I'll pause there if anyone wants to comment on any of those before moving on to Stillfront, or I can just jump on in.
I think you made a really good point that this might be a last clean snapshot of the current Microsoft gaming and Xbox business before it sort of gets commingled. And I think you called that sort of the key trend lines, because it was an ever present topic on this podcast. I can't sort of we have to go through and sort of say put the pin on it, right? Which is it is pretty clear now that the deal will close. All remaining slight resistance will end, be rolled back, and that we're going to see a sea change in the Microsoft business going forward today. I think, as all four of us called it, was my recollection.
Yeah. So final snapshot, and then we can hopefully finally start talking about what's new and different and interesting about the combined entity, but one quarter at a time. The last company that I just want to quickly hit on this time around is in a completely different corner of the industry, which is Stillfront. And it's interesting because the company's bookings were flat, but their free cash flow grew 50%. And admittedly, that might not be the best view, since their operating cash flow, sorry for getting jargony, has also largely been flat, but it's a major shift in focus on what matters, what metrics matter, and what type of results the company is trying to achieve. And I suspect the largest lever of that free cash flow change is pretty heavily ramping down customer acquisition costs, which honestly isn't great, because that is the organic growth engine. But working to optimize costs and go slightly more direct to consumer, which they're doing too, is a good move. And so today, Stillfront, is a nicely profitable business. But the other interesting thing I want to point out is that even talking about acquisitions isn't even a thing anymore. It's not even being mentioned anymore by the business, at least in any of their written materials. And so Stillfront has truly fully gone from their empire expansion mode to nurturing mode. And it's in a better shape than like an Embracer is, which was just overly hyper aggressive. But it's really a group of these companies, not even just a Stillfront or Embracer, that has so profoundly changed their tune in the past year. And so it's just, again, just like along the journey, it's just sort of like a note that's interesting to see, and kind of and just note that is happening. And I'm curious what you all think about this, because obviously things cannot return to the way that they were before. Like when we talked about the market heating up, this is not an area of the market that's heating up or becoming more forgiving. It still is very, people are very particular and critical, because I think maybe the market has lost trust in this growth by acquisition strategy, and probably for good reasons in a lot of ways. But the thing that I'm curious about, and I'm curious what you guys think, is what do these like previously hyped growth by acquisition companies even look like, 3 to 5 years from now? And when the market ramps up and M&A starts happening more frequently again, like how do these companies fit into that, or will M&A just be done in different ways than we saw in the last bull cycle? So, anyways, a couple of things there, but curious what you guys think.
I don't think M&A is dead. M&A might be dead in this case, and as we talked about related to Microsoft, there's been some regulatory pressure on M&A, but I think given the track record of the FTC in the US, I think we're going to return to, as we talked about earlier, sorry, we're going to edit and we're going to take this back. So I'm going to be a little more clear. I started to lose. Okay. Related to your point about M&A versus organic growth, as I stated earlier, I kind of feel like a reversal from pure focus on EBITDA back to some focus on growth, given what's happened to the FTC's challenges and given what's happened to valuations in the public marketplaces. I predict certainly not a return to the level of M&A of 2021, but M&A is not going to be as dead as it's been in the last 6 months. And so I predict, and especially in like, say, the realm of esports where valuations are horrible. And in fact, you saw news yesterday that potentially FaZe Clan is being acquired. I do not think M&A in gaming is dead at all. And I predict an uptake in M&A in gaming.
Yeah, I agree with that. Actually, I guess the delineation I'm trying to make is that when M&A returns, I mean, it hasn't really left, but if it like returns in some like higher volume kind of way, is the way that it's going to return be different? And the kind of the main thing here is that I think M&A can make a lot of sense when you have a strategy and you acquire something that helps you better achieve that strategy that you have. But for many companies, acquisitions were the strategy, and growth by acquisition was the game. Um, and so I'm curious whether that side of things will bounce back, and if it doesn't, like, what do these companies that exist in order to primarily be growth by acquisition, like that was their their motive, like what happens to those companies, in like this next cycle that rolls through?
I agree with you. And, I think the market will delineate quality from, lack of strategy. And I think the canary in the coal mine to your question might be Vice and BuzzFeed, right? Like if your growth strategy is just acquire stuff and raise more money, you will not survive. But we'll see a return to strategic acquisition and strategic growth. And I think that's probably the best middle ground we could hope to land on. I think we went from too hot to too cold, and hopefully we'll return to some logical functioning marketplace that neither outsizely rewards austerity or outsizely rewards acquisition.
Yeah, well said. I agree with all of that. I feel like the acquisitions went mad. There was sort of no rhyme or reason to them. Now they've gone too far the other way, where it's like there's tons of good people out there, but people are too scared from it. And then when people figure out going, oh, like we're a great mobile developer and here's a really great mobile studio, or we're a great console developer that makes narrative games and here's a great company that also does that, then surely these dots will connect. But given current economic climate, I don't think it really surprises me that right now you see next to nothing. And as you say, it will, as the cycle, it's a cycle for a reason, it will come back.
I'm curious, I know what you think about like kind of the role that some of these like more prominent growth by acquisition companies played in terms of being like a source of exits for like the startup community. And when people are creating mobile games or other games, there are just a lot of options and interested parties who are just looking to acquire. And there's always going to be some of that, coming from more strategic lenses, or maybe like a Tencent will still be involved in building out its ecosystem in some way. But do you have like any early thoughts or observations on like how, in the way that M&A could change or just get more specific in this next cycle? Like, do you think that'll have an impact on the startup landscape and how people kind of think about starting companies if their exits are potentially different?
Definitely. Well, I think we've seen a big change just in the last 2 to 3 years where a lot of startups these days tend to be more cross platform or console PC focused than mobile. The big reason for that is because acquisition changes really, and that's to answer your question, that is why it was so growth focused. So I think what happened with the big players, they thought, oh right, acquisition is dead, so actually if you buy this game or this studio with these games that have combined 5 million 10 million daily actives, actually if you look at it on a CPI basis, it's quite cheap. It's like if you look at like when Facebook Meta bought WhatsApp, it was like 20 billion or something like that. And I think if you worked it out, it was something like $6.50 per user that they were buying for. But I would argue that now, if we look at the current rate, probably a good deal, to be honest, if you were to extrapolate it like that. So I think that was the reason why it changed so quickly and why people felt like they couldn't risk to be left at the station whilst everyone else was jumping on. And then I think people have realized, well, they got carried away with that. As you say, maybe fundamentals are important, stroke strategic acquisitions. So answering your question is like what it will mean for the space. See, the thing is, I think that is all dependent on how the market is, right? So I don't think that was necessarily a decision that startup founders were making to go for that strategy. It's just those were the ones that were being successful. I do know a lot of people who, for example, started making merge games. They're the ones that did really well because that was like the hot thing on the market. You could grow, you could get the users, but now that genre is really saturated and it's hard to break in. So now there's a lot of people who made that decision and are like stuck between a rock and a hard place. And, they've just adapted to what the market conditions are. I mean, look, you could make the same argument with Web3. People thought, okay, this seems to be the way the industry's going, so let's jump on that bandwagon, see if it takes us anywhere, etc., etc. Will be the same with AI, will be the same with whatever. There is a certain thing to doing it. But, Jonathan hit the nail on the head. It comes down to quality, doesn't it, at the end of the day? The ones who will always survive will be the people that genuinely make great stuff. Don't know if you've seen it recently, but there's 3 guys who make this game called BattleBit. Not really a startup because I think they've been working on it for 9 years, but it's finally like hit the inflection point and turned the corner. And if you play it, great game. Okay, it's got the kind of graphics you'd expect that of 3 dudes making it in their spare time. It uses kind of like very, blocky type characters and things like this, but the gameplay is like fundamentally great. So, yeah, do you know what I think is always the danger here is that like people will read the market now and then they will make certain changes based on that. And then in 2 years' time, when they might even be at the possibility of getting acquired, then it'll be a different flavor that is wanted. And therefore, the decisions that they made now will actually backfire on them. Hence, like I say, some people going for hyper growth or merge and things like this. The best thing is always to go for quality, but it is hard to deliver on quality without the necessary resources. I do think that I would say certainly with like a lot of the Web3 startups, I think the big worry among some people is that they raised a certain amount to develop a game, but they didn't raise enough to truly finish their game at the quality that they wanted to, because they were expecting that they'd get their second round for sort of showing their traction. So now they're having to cut scope or reduce things. And that's like a bit unfortunate because the traditional playbook would have supported the way that they were going and they had the kind of rug pulled from under them. So, it's not just those ones. That's just a very recent example because so many people raised. So, yeah, I think that's a dangerous assumption as well, is that what do you optimize for now? And then it kind of changes. So actually, I think that what will happen is that you will get big M&A going on just on growth again, even though that's not the current fad, because these things just sort of go in cycles.
Cool. Well, hopefully there's good people left to pick up. That's the thing is I wonder is like, you talk about we had these big waves, right? But it's like, does it go from a buyer's market to a seller's market kind of thing? If all the good ones were picked up, then does that mean it's like, well, then you have trouble getting acquired at that point because the thirst for acquiring the good quality companies is over, or the opposite, where it's just like there's tons. If you guys are saying there's tons of good companies left to be picked up, then it's like, well, they're just waiting for the checks to be written kind of thing, and they're just biding their time. And then it shifts, right? Like because you get those things that, like you said with Anil as well, with what they're making and whether or not that's a hot part of the market. And it's like you could end up with those situations where you have these quality companies making a quality product for a thing that's hot yesterday, and then just missed their boat because they weren't one of those M&As that happened during the time when there was just large checks being written. And so it sounds like a real struggle of timing as all these markets are, right? Like,
I feel it always goes. Yeah, I feel it always goes that way though, right? Like that is literally what happens, is that it goes cool, then someone buys someone, and then they're like, what the hell? You're telling me you could get those guys? I didn't even know that they were available to be acquired. How can we miss this? So then they go, okay, what's the next? Basically, people just go down a list and people keep taking them. And then that's why you end up in a situation where we did, where some of the ones, I'm not going to name studios because I think that would be unfair, but there were some acquisitions that were going for like hundreds of millions of dollars when they had at best a patchy record or, just one sort of semi-successful game and were way overvalued. So then that leads to sort of place where then, okay, no one's going to buy anything right now. And they'll go back the other way. That will kickstart it again. If someone will just pick up a great studio for a price that just seems like bargain basement. And yeah, everyone's nodding their heads because we've seen this happen like time and time again. It's like, you can set your clock to it almost.
I mentioned it all starts to scatter some of the talent around as well, right? So then you see them scatter to new studios to potentially be acquired, and the cycle continues, as you say. But we'll see as the money turns around in the market, of course, because like that goes in its own cycles and the seasons and everything else, right? Try and time it as best you can. But lots of good stuff. I'm sure we'll be hitting this up, pretty regularly as M&A season picks back up again, or when, as you said, Anil, when one big purchase happens and everyone gets excited, gets the checkbooks out again, we'll be right back on that train. So look forward to that, and hopefully it's the right people on the next time around as well. But definitely a lot of good stuff today. I thank you guys for, of course, joining me. Great conversation as always. Thank you to the listener for coming on, for listening. And of course, make sure to hit us up at the old mailbag if you got any feedback, stuff you want to say, topics, whatever, at podcast@naavik.co. And of course, as Aaron was mentioning at the beginning, make sure to subscribe to the digest. A lot of good stuff happening there, a lot of articles, a lot of deconstructions, all kinds of stuff as we're really starting to ramp stuff up. And I think it's a great time to make sure you're trying to stay on top of it as best you can, alongside, of course, the podcasts, not just this one, but all the other ones we have here. But in the meantime, we'll see you next week.
If you enjoyed today's episode, whether on YouTube or your favorite podcast app, make sure to like, subscribe, comment, or give a 5-star review. And if you want to reach out or provide feedback, shoot us a note at podcast@naavik.co or find us on Twitter and LinkedIn. Plus, if you want to learn more about what Naavik has to offer, make sure to check out our website, www.naavik.co. There, you can sign up for the #1 games industry newsletter, Naavik Digest, or contact us to learn about our wide-ranging consulting and advisory services. Again, that is www.naavik.co. Thanks for listening, and we'll catch you in the next episode.